Shopify is arguably one of the most hyped stocks in the software application category in 2020, with their stock price going from $305 to over $1,000 in only 3 months in 2020. Shopify is a one-stop shop for small businesses and e-commerce entrepreneurs, where you can create a website backed by powerful tools that can help you find customers, drive sales, and manage your day-to-day. With the rumors that Shopify might buy out Stamps.com, the volatility of the stock price got real, with the bulls and the bears on Wall Street literally going head-to-head, ranging from very bearish to very bullish. So obviously I had to put my Invest Diva hat on to chime in and see what could be next for the Shopify stock price. And today I'm wearing a suit, so you can trust me. In today's video, I'm going to analyze the Shopify stock price from 5 points of my signature Invest Diva Diamond Analysis that analyzes any asset from 5 points: fundamentals, technicals, market sentiment, risk assessment, and overall how it fits within your unique portfolio. And with that, we're going to find out what the future holds for the Shopify stock price, what type of investor should consider adding Shopify to their portfolio, and at what price, and of course, whether or not I'm personally invested in the Shopify stock. We are going to cue in the intro, and while we do that, head over to the comment section and tell me, do you personally use Shopify, or are you a customer of a company that uses Shopify that you know of? Head over to the comment section and let me know. We're gonna cue in the intro and let's go. Hey guys, I'm Kiana Danielle, 3-time author with the 4th one coming this Thursday, and the founder of the Invest Diva movement, the march to jump on in order to take control of your financial future and to make your money work for you. I analyze tens of assets for my premium investing group or PIG members every single week. So if you'd like to see how you can get a 3-month free membership to the PIG, what you're going to do is to open up a new tab, type in learn.investdiva.com/yes. I'm going to add a link to it in the description area as well. Register your seat for my upcoming on-demand training so that you can watch it after this video is over, and then come back here so that we can get to the Shopify stock analysis. Shopify is a leading platform for small businesses, and it's supported by the largest number of merchants of any platform. The company could continue to drive strong revenue growth over the medium term thanks to more merchant subscriptions and the add-on features like payments, SFN, and shipping. They have been really good with their marketing too, and they've been using search engine optimization, blogs, and network referrals to attract their small business customers, and their scaling will help them with margin expansion as well. They're also expanding with larger businesses, creating customized platforms for those who will pay them up to $2,000 per month. So as you can see, the basic Shopify is only $29 per month, and here on the website we have $299 per month, but there are rumors that for massive, big, larger customers, they have a customized payment plan that is up to $2,000. What this shows is that they're prepping to guide their customers up their value ladder. If you're an entrepreneur, you know what that means. Shopify's market cap as of today, July 21st, 2020, is $113.5 billion. They do not pay dividend, and their earnings is okay. Where are we? Their earnings is coming up on July 29th. Their biggest competitors, I mean, we don't have an exact competitor in exactly the same as Shopify, but BigCommerce is supposed to be one of their competitors. They're not publicly traded. Wix is a website building company. They are publicly traded. They're based in Israel with a $14 billion market cap. Then we got Squarespace, which is again not publicly traded. And then Morningstar says that Salesforce and Adobe, for that matter, are Shopify's competitors, which it's a little bit different, but I guess they're kind of in the same category, right? But Shopify crossed an important milestone of signing up the 1 millionth merchant on its platform in 2019. But the fans say that this is nothing compared to the 28.8 million small businesses that could eventually move their businesses to the Shopify platform and exponentially grow Shopify's business. And not to mention that the worldwide opportunity is also massive. In fact, there was an article that came out by The Motley Fool in June talking about 10 reasons to buy Shopify and never sell, which probably helped pumping the Shopify stock price even further, especially because the Motley Fools, as much as I like their marketing and search engine optimization skills, they are famous for pumping and dumping stocks, and they literally can create a ton of hype due to their wide reach. I'm talking about Motley Fool. So when I saw this article, I knew it might soon be time to start selling the Shop stock after it reaches key resistance levels that I am going to show you in a little bit. Looking at the charts, it kind of looks like this may be in fact the case. And now we have the Shopify and Stamps.com buyout speculations because Citron Research thinks that we will soon be buying postage stamps from Shopify. And when this speculation first came out, both Shopify and Stamp stocks went soaring. But right after that, the enthusiasm kind of started to fade away. And now we have analysts ranging from very bearish to very bullish, with each of them focusing only on the points that support their respective views on the Shop stock price. So for example, we have the bulls saying that Shopify's growth has been strong and is expected to remain so, with robust new merchant ads, increasing GMV, and high attach rates. They say Shopify is attractive for small businesses because it is simple to use, has a wide variety of built-in features that can make it an all-in-one solution. The company has many experts to help small businesses too, with website design, photography, and other elements of the process, and they benefit from a large referral and developer ecosystem. On the other hand, we got the bears and the non-fans saying that Shopify may still fail to live up to the optimistic assumptions already priced in their share price. Being priced in a share price basically means that people were speculating, buying the rumor, and they might sell the actual news. Bears also say that Shopify is overexposed to the economic cycle and retail volume could probably decline in a downturn. And last but not least, this is what I personally think, is that with COVID-19, many businesses look to bring their businesses online, which obviously helped Shopify. But this trend could end or a competitor could take over. We never know. Now that we've got all this down, let's take the charts and look at Shopify's price action. But before we do that, head over to the comment section and tell me, with all the fundamentals and sentimental points of view, where do you stand right now? Are you a bull or a bear when it comes to Shopify stock? All right, we're now looking at the Shopify stock price. The last time I actually analyzed the Shopify stock price for our premium investing group was here on May 18th, when the market price had just reached an all-time high back then, which was a 773. And back then, based on Fibonacci retracement analysis, I predicted that the Shopify stock price can go up to 50% Fibonacci retracement level at around 1,000. And guess what? This is what exactly happened. The next resistance level is a 23% Fibonacci retracement level based on this previous all-time high, obviously, at 1,125. So we've had a diva win so far. But now that we have a new all-time high, I obviously have to renew this analysis. So let's go. This is all of my analysis from back in the day for our premium investing group members. But as you can see on the monthly chart, the Shopify stock price has generally just grown and grown and grown and grown and grown and grown, and it accelerated in 2020. The new all-time high right now is over here, so we have to readjust our Fibonacci retracement level. Now this is the new resistance level, and I have to create new resistance levels for this as well. One way to do this is to, again, use the Fibonacci retracement levels. I might go long term with this one. So we're going to do this, bring this up here to create our next resistance level right here at 1,281. The next long-term profit target is set at 1,444. But remember, this is definitely long-term over a year because I'm using the Fibonacci retracement level that traced the price action from back in 2019. Based on the Fibonacci retracement levels, these are the support levels now. So we got 849, 712, and then the 50% Fibonacci retracement levels actually half price at 594. Now, considering that Shopify stock price literally just went from 594 to over 1,000 in merely 2 months, if the Wall Street bears are right about all the deficiencies in the Shopify stock, and if a competitor comes along that does things better than Shopify and has a better branding, then yeah, you know what? We could see a pullback. Now, we cannot rely on a second wave of COVID-19 to bring down Shopify stock price as much because look, the first COVID-19 bearish momentum didn't actually impact the Shopify price that much, and its price was able to recover pretty rapidly comparing to many other companies in the tech sector. So Shopify kind of benefited both from COVID-19 and being the tech sector that is just skyrocketing right now, is out of control, and majority of analysts are just baffled as to what the heck is happening. Now, this doesn't mean that the second wave of COVID-19 bearish momentum wouldn't at least a tiny bit impact the Shopify stock price or trigger it. So that's the reason why we would like to set our buy limit orders at any of these levels to prepare for a potential crash. As you can see, this resistance level at 1075 that I did predict is really challenging the stock price to go higher. But don't be fooled because the previous level at 849 also challenged the stock price from going higher. So there's also a chance that by the time that Shopify announces their earnings on July 29th, and if they exceed the expectations, we could even see a surge above this level. So there is a little bit of an uncertainty going on in the markets. Yes, of course, a lot of the expectations has already been priced in, but if they exceed the expectations, then the price could go even higher. And I think that's the reason why we see so much dividends between the bears and the bulls in the markets. And there is almost no way for us to say for certain which direction the price is going to go. So if you are a fan of Shopify and considering that this does not actually pay a dividend, so this is not suitable for somebody who is, you know, in their older days and looking for dividend payment income, and you're only looking for growth, then you want to mitigate your risk. You don't want to miss out on Shopify stock price going down. You don't also want to miss out if it just would never go back and continues its way up. So how do I do that? This is how I do it. I set buy limit orders to buy more of the asset as the price goes down, as and if the price goes down. And if you don't have any Shopify and you're interested in this stock, then you might want to consider purchasing your first portion at the current market price. Today, the stock price is actually dropping. Those are the days that I actually like getting into the market. If you're a fan of buy limit orders as I am, you could consider getting in and buying your first portion at 920 and then setting your buy limit orders at these respective levels. Then when it comes to taking profit, again, because Shopify doesn't pay a dividend payment, I would consider taking profit, partial profit at any of these levels and getting back in again. When you're developing your investment strategy, make sure to also consider the tax consequences, especially if you're in the US. If you're holding your stocks for over a year, your tax bracket could actually be lower, although there are ways to go around it. There are some day traders and short-term traders who have found a loophole, and you can bring down your capital gain taxes to 21%, but that is only if you are trading larger amounts. So if you're getting in and out within a year, there is a high chance you're going to pay more taxes on your capital gain. So keep that in mind. And last but not least, am I invested in the Shopify stock? Yes, I bought my first Shopify stock last year. And I don't have that much exposure to the stocks. I'm considering getting back in once the stock price goes back down. Again, because I already have some Shopify, I'm not too much in a hurry to buy right now, and I'd rather wait for it to go down. Of course, this means that I might miss out on more Shopify shares, but I have made my peace with it. So if I don't get in, I don't get in. And that is how you should manage your emotions. When you're getting in, if you get in today, you have to be prepared for the stock price to potentially drop 50% tomorrow. And if you consciously have made that decision that you can make through it, then go ahead and hit that buy button. But if you think you're going to get a panic attack if the stock price drops, then probably you should not be investing in this asset. Remember that the majority of investment management is about emotion management and mitigating your risk. If you'd like to learn deeply how you can do this on your own without the help of a financial planner or a money manager, and how you can become your own money manager and create a portfolio that is unique to you and your needs at any given stage of the economic cycle, you know what you got to do? Open up a new browser, type in learn.investdiva.com/yes, and register your seat for my on-demand training on how to take control of your financial future and how to make your money work for you. This is an unbelievable opportunity for you to learn how to do it on your own and the right way, so you don't panic every time the stock prices move. By the end of that masterclass, I also talk about how you can get a 3-month free membership to my premium investing group, or the PIG. So make sure that you stay until the very end. As always, thank you so much for tuning in. If you like this video, don't wait. Go ahead and give it a thumbs up. If you didn't like it and if you think my voice is annoying or my suit is annoying, you know what? You can go ahead and give it a thumbs down. I wouldn't appreciate it, but you know, that's your opinion. I create awesome YouTube videos every single week, and sometimes 2 to 3 times a week. It depends. So make sure that when you subscribe to my YouTube channel, you also hit that bell notification button, because you don't want to miss out on my next analysis that could actually be very timely. Stay on top of your game, and remember that the only path to true wealth is by making your money work for you.